All right, it is Tuesday, September 2nd, off the back of a long weekend in the US, and we have got a last-minute deal that keeps Fox on YouTube TV to talk about just in time for the start of football season. Disney's taking Sling TV to court over those new $5 day passes that we discussed in our podcast just recently. And we're looking at viewing data that has YouTube, still in the lead in terms of time spent watching, and the new NFL going free to air in the UK. So lots of media deals to talk about both in the US and Europe, with another big European media merger proposed between MFE and ProSiebenSat.1 that could look to shake up our media owner league table. So let's get into it. Welcome to episode 74 of the WPP Media Intelligence Podcast. I'm Kate Scott-Dawkins. I'm joined this week by Jeff Foster and Nidhi Shah. And each week, we break down the numbers, trends, and deals shaping the global media landscape. And most importantly, what all of that means for advertisers. Today, we're talking carriage disputes, streaming shakeups, sports rights, and one of the biggest European media consolidations in years, assuming it goes through. So let's start with the U.S. and talk about important news for any football fans. Jeff, let's talk Fox and YouTube TV.
So this was another interesting one. It was a little bit dramatic, came down to the end. But there was a good old-fashioned carriage dispute between Fox and YouTube TV. So YouTube TV has about, 9.5 million subscribers, somewhere in that range. So the blackout would have affected about that many people nationwide, and of course would have coincided with the start of college football season and the lead up to the NFL's kickoff, which is this week. It was fortunately solved at the last minute, so football fans will be very happy. They will be getting all their games. But I think we're just going to see more of these carriage disputes. I think the devil is in the details. So a report came out today that it looked like that YouTube TV might be coming out with a skinny sports bundle, which was a sticking point in the negotiations, which made it a bit more contentious. So is this just the sign of the times we're living in, that we're going to see more and more of this?
Well, YouTube's a big player here, right? They're not just a, virtual MVPD or multi-video programming distributor. It's much easier to just say MVPD for that one. They are, you said we're estimating 9 to 10 somewhere, right? The last disclosed number, I think, was over 8 somewhere. But that's getting up near the numbers of a Comcast or a Charter, some of the largest MVPDs in the US. So this isn't something that Fox can just easily walk away from, right? It's a big number of subscribers there that YouTube has gotten, and by far the largest, more than double the size of Hulu than we're estimating, or thereabouts, in terms of virtual MVPDs.
Yeah, and also the price has been creeping up for YouTube TV over the years. They just raised their prices recently from $72.99 to $82.99, and they cited increased content costs. So at some point, when does the bundle start not looking as attractive, which would make sense of why they're considering a skinny bundle just for sports.
Yeah, sports is one of the big reasons that people continue to pay for cable, right? And we're seeing that get trimmed, I think, with cord cutting. And so we're seeing a few of these sports-focused bundles come out recently.
Yeah, and it looks like Disney's deal with YouTube TV is coming up at the end of the year. So I think we might see a similar story down towards the end of the year, and we'll see how that one plays out. And I think that will be another interesting one, too, because by then Disney should have some good numbers in for the signups for the new ESPN direct-to-consumer streaming service.
Well, and these are two, Fox and Disney, remember, are the two that have not spun out their cable channels, right? One of the sticking points is that for these carriage disputes is the companies that want to, bundle all their cable channels. You could get the sports, but you also need to carry whatever. For Disney, that looked like Nat Geo Wild Jr. or something, right? Some of these smaller cable channels, which was, again, reported to be one of the points that the Fox and YouTube conversation was about. And so for those two particularly, I think that remains a definite negotiation point.
Yeah, exactly. And of course, Fox is a little bit different since they have a fairly slim cable profile with just sports and news. So I think that added some other, a little bit more intrigue to this. But yeah, we'll see how it plays out with Disney.
Yeah, well, and speaking of Disney and sports, Disney's taking Sling to court over its new short-term streaming passes that we talked about in the last episode or two, where they're offering these like $5 a day or $10 a weekend. And so Disney has issue with that, right? They want people to be paying as a subscriber for the full length of term, right?
Yeah, I mean, I can't say I'm super surprised by this, just knowing kind of Disney's, how their past and how they operate. I guess it would be interesting to see the books like on how Sling would operate, because if you're only buying a weekend pass or a day pass, how does that get passed through to Disney? Do they just get a prorated carriage fee, which I'm assuming would be what the holdup is? But it would be obviously, yeah, for a company like Disney, not great to sell those day passes.
Right. So, as a reminder for listeners, when we're talking about these media owner companies, right, they have been earning fees on usually a per subscriber fee from the cable operators. And each of their channels will have that assigned to it, right? And for a lot of these companies, the affiliate fees were significantly larger than advertising, right? This is
Yeah.
a big chunk of their revenue. So when you're looking at, and typically cable deals would have been in a year-long contract, right? And so you could calculate and have a reasonable assurance of your subscriber fees and numbers for the year, which is what you're saying then, Jeff, when it goes to a day or a month.
Right.
How do you prorate that? Is it worth it to the media owner as much as it is to the distributor in that case?
Exactly. And if you're the media owners, in most cases, as you mentioned, the subscriber fees can easily be the same or more than ad revenue in a lot of these companies. Then do you just start selling day passes? And then what does that do for the value prop for your streaming service?
Yeah. Well, so for advertisers, what's the main consideration here? I mean, this is more so around the media owners side of things. They're also trying to recoup or
Yeah.
maintain as much ad revenue as they can on these linear networks. But is this just a further push to continue investing more and heavily into streaming, as that's where they're getting the direct revenue benefit rather than needing to rely on these MVPDs and VMVPDs as partners?
Yeah, it sure feels like it. I mean, again, this is gonna be an interesting one to see how it plays out. I think these business models are still very much up in the air since we're still in relatively early days of streaming, and with sports becoming extremely expensive, it'll be interesting to see if someone can find a creative way to do this that consumers will be happy with. But I think we're not quite there yet.
Yeah. All right. Moving on to, we'll come back to the Nielsen Gauge info, I think. Let's move. Let's still talking sports and the NFL in the UK. I mean, they've looking at sort of, I think, the success of the NBA and basketball internationally, right? And the commissioner has certainly talked about bringing more NFL games to international markets and international viewership. And so, Nidhi, there was news on that in the last couple of weeks, too.
Yeah, and I think it's a very interesting news because football is an extremely popular sport in the UK and in Europe, and the announcement of the US National Football League, the NFL games with Paramount, which owns the free-to-air channel Channel 5, announcing the multi-year deal that will bring weekly coverage of the live NFL games is really interesting, right? Like, we've seen it in pay TV providers such as Sky having the rights of those games, and they've recently extended the rights as well to a new 3-year deal, and reported that they'll be increasing the coverage of the games by 50%. So lots of coverage, it seems like, in the UK, which is really interesting because it's a kind of shift from premium sports content and becoming available more in this free-to-air environment and not just behind paywalls, right? We've seen kind of the importance sports has had on TV advertising revenue from sporting events like the Euros and the Olympics. And I think the big question here and the kind of consideration is, how free-to-air NFL will kind of shape the sports media landscape in terms of future negotiations, right? Not just more players in the market to kind of bid for these rights. How exclusive will they be? And, whether it indicates towards more premium sports content becoming free to air, not just in the UK, but also in other European markets, right? There's news on DAZN having one free game for the NFL per week as well. So it'll be interesting to see how that also plays out and the kind of impact that has on advertising revenue in the next few quarters.
Yeah, I mean, Premier League and Championship League football, what the Europeans call football, has been big there for so
Yeah.
long. I'm curious they're going to have to make all the distinctions about American football when they're talking about what's airing that weekend. And then making sure that I don't have a good sense of how the seasons overlap. I can imagine that's a lot of sports now on UK TV over the next several months.
Yeah, I think global audiences love sports, so I don't think British are any different, right?
It sure seems like the NFL is putting down the framework for, European expansion, which has long been the rumor, which would lead to a European league and or TV package.
Yeah, absolutely. If you're looking at kind of increasing that scale and audience, we've seen like how big Super Bowl is, right? That as well is expected to be part of this coverage and under this deal.
I guess you in London can experience the Travis Kelce, Taylor Swift Chiefs games experience that we all get here in the U.S.
I'm excited for that if that happens.
Yeah, how did we not open with the Taylor Swift news for this podcast?
Yeah, exactly.
There was other European media news just this week, MFE and Media for Europe and ProSiebenSat.1 as well.
It goes as this broader theme, right? We've been discussing about where we're seeing more consolidation within the European advertising market. And, while the official details are expected to be announced later this week,
sorry, we didn't give the full intro. So it's that Media for Europe is looking at a majority stake in ProSiebenSat.1. That's the deal we're talking about.
Yeah, and they're expected to increase their majority stake in ProSieben, and that's basically after their rival bidder, Czech investment firm PPF, has agreed to sell their stake to MFE. And that would mean that MFE could have a major controlling share, nearly about 60%. And it's been a stake it's been building since 2019. And I think it's really interesting for a couple of reasons, right? First, the M&A environment in Europe, particularly between large media owners due to regulation, has been very difficult. So I think we're likely to continue seeing consolidation in this space, and especially as some of these European broadcasters competing with international streaming platforms, especially with local content being a big focus, and TV being a very important kind of channel within Europe. And I think just looking at where this would place, in terms of ranks, these media owners, if I look at 2024 data, the advertising revenue of these two companies would total nearly $5.1 billion US. So that would rank it in 19th spot, just above JCDecaux, Snap, RTL, and Walmart, but below Fox, but still making it the kind of leading pan-European media owner within our top 25 media owners list.
Yeah, no, it's massive. And for very long-time listeners of the podcast, back to when it was me and Brian Weiser, this is something that we talked about wanting to see from the European players was greater consolidation and scale in order to compete with big players like, YouTube, for instance, in this, or Netflix, right, that had scaled audiences and scaled advertising. When we think about these big companies, multinational companies that tend to be the largest clients of these TV and linear TV networks, they're probably in all of these markets, right? So making it easier for them to coordinate buys across not just one European market, but multiple markets, you can see how that would be beneficial for sure. So good kind of to see that coming to life. We'll see, as you mentioned, the regulatory landscape. Of course, the M6 TF1 tie-up was not allowed by regulators just a couple of years back. So we'll see if this one gets further now that the competitive landscape is continuing to change. All right. Let's move on to newspapers. Speaking of the more legacy media owners in the US, Jeff, we've just been going through the Q2 numbers and updating our estimates for Q3 and Q4
Yep.
and making some more optimistic predictions for news, actually, given
Yeah.
the sort of headline mania that we've been experiencing for the past 6 months.
Yeah, exactly. As we were doing our analysis last week, and with all the 2Q data in, we did notice that newspapers are definitely far from dead. Now, of course, there's been a lot in the news with the U.S. with a very fast news cycle, so I'm sure that probably helps. But we did notice that New York Times total advertising in 2Q was up 14.2%. Digital advertising for them was up 18.6%. So New York Times, it seems to be very much benefiting from the Trump administration. And then when looking over at News Corp on the Dow Jones side, advertising was up slightly, about 2% in constant currency. And then looking at Gannett, digital advertising, so that excludes their marketing services, was up 4% in 2Q. And, same store growth, digital advertising and market services up about 6.2%. So, generally pretty strong numbers, and especially looking at the New York Times. So I think it's interesting.
Yeah, and the New York Times, again, it benefits from scale
Yeah.
in the world we're in, national
Right.
advertising, right? All of that from companies that are looking for those scaled buys and wide reach of audiences. So we'd like to see that. We would love to still see advertisers investing in hard news and journalism, right? WPP Media has been a proponent of that for a long time. So love to see that. Not quite as, maybe some mixed bag on the UK side with Reach, Nidhi.
Yeah, correct. I mean, they reported print advertising declining by 18.2% in second quarter. That decline was faster than the first quarter. And really, we've not been seeing digital advertising growth really offset that decline in traditional kind of print. But what was interesting was they disclosed how much of that growth in the digital revenue was from indirect versus direct. So, indirect being from programmatic advertising, third party advertising. That revenue within digital grew by 9.2% in the first half of this year. Whereas more the kind of direct advertising and from agency declined, and Reach really mentioning about focusing on growing revenue outside their core advertising model, such as e-commerce, and deploying more kind of video formats to kind of revive their revenue.
Yeah, so lots of places still for advertisers to look for in terms of investing outside of just the big three, Google, Meta, and Amazon, although they do continue to grow faster than the rest of the market. Let's wrap up with a couple of China-based players. We had Xiaomi, which grew 2Q advertising. Well, 2Q advertising revenue was about $950 US, up 14.6% year over year. That is decelerating in terms of growth for them. But trailing 12 months, $3.7 billion in advertising revenue for Xiaomi. So definitely becoming a major player. I was also interested in a news story from Reuters around ByteDance, saying that they were issuing some share sales at a $330 billion valuation. An article saying it's now bigger than Meta in revenue. But the reminder, and one of the things that we like to do with this podcast is talk about how we view the numbers and how we calculate things for our forecast, is that will include commerce revenue, which we don't include in advertising revenue. So, you're looking at a less than half commerce revenue. For 2024, we assumed close to $90 billion in advertising, which, working backwards from growth, would be about $60 billion in terms of commerce. So quite a big part of the business, especially in China. Although I think they're having difficulties, if we again believe news reports, scaling that in other markets like the U.S. But interesting to see the article talk to about their AI investments and products. That's been a big piece of their story and for all of tech. I'll end on one note from a New York Times article I've read in the last week or two, which was that investment in software and computer equipment, not counting the data center buildings. So all this AI investment from companies in the US accounted for a quarter of all economic growth this past quarter, which was using data from the Commerce Department. So massive. And that's one of the upside potential pieces that we talked about in our June forecast, right? Was that we downgraded overall growth for the advertising industry, but investment in AI, investment in marketing from AI companies or companies that are using AI more and more in their processes could end up driving a slightly higher upside for 2025 growth and even into 2026. So keeping a very close eye on that over the next couple of weeks, a couple of investor days next week, but otherwise maybe a little bit quieter. So we're going to get a jump on the December forecast and getting our numbers together for that. Anything else from this week on the wrap?
No, I think it's an exciting sports week coming up. We got U.S. Open here in New York, which is always a fun time in the city. Start of the NFL season, and something I'm really looking forward to see is the YouTube NFL Brazil game. That's on Friday. So curious to see how that goes off and what the streaming experience is like.
Excellent. All right. Well, we'll catch up on all of that next week. Thanks, guys. The Media Intelligence Podcast from WPP Media is meant for informational and entertainment purposes only and should not be considered financial advice. If you have any questions for the show, you can email business.intelligence@wppmedia.com.